The basics of VAT. When VAT was introduced, it was introduced as a simple tax. That's what the Chancellor of the day said. He was definitely lying. VAT is one of the most complicated taxes that there is. This video is going to go through the basics of VAT, what as a small business owner, and particularly as a small business owner starting out, you need to know about VAT. You need to know about it because for most businesses the quarterly VAT bill is their biggest bill, so therefore understanding about your biggest bill is inherently important. One thing that you might not know about VAT is that it is very much EU law. So even though we've left the EU now, it is very much EU legislation. So 99.5% of it is in fact the same in all EU countries. And talking shortly after Brexit, we haven't had time to change very much at all. This is part of a series of videos about tax and accounting issues, so if you'd like to be kept up to date, then please subscribe to the channel. You will be very welcome. If you press the like button, it really helps me and helps get my message across. And also, if you want to comment on it, I will look at and answer your comments as soon as I can. So what is VAT? Well, VAT is value added tax. So it's tax on the value added of a business. So what is value added? So value added is your sales less your cost of sales. So generally it's a tax on your labour input and on your profit and any inputs that don't have VAT attached to them. So it's a tax on the value added of your business. So how is it calculated? So if you have sales of £100,000 per quarter, you'll put £100,000, you will add VAT normally at 20%, and then you'll be paid by your customer the full amount, the £120,000. £100,000 plus £20,000 VAT, £120,000. And then you'll also likely have purchasers. So even for service orientated businesses, you normally have purchasers. So if, let's say, you have £12,500 of purchasers, 20% you'll add, or your suppliers will add £5,000 of VAT, and you will pay your suppliers £17,500. So you've received from your customers £20,000 and you've paid to your suppliers £5,000, and the difference between those two, £15,000, is what you'll pay to HMRC. And in principle, VAT is as simple as that, but as I say, it is a very complicated tax. So let's put a few more layers onto it. So I guess the first thing to look at is who actually suffers the tax, because it is a tax and it's actually one of the biggest taxes that the government collects. So who pays it? So if I raise an invoice to another business, that business doesn't suffer the tax because they can reclaim the VAT and you pass on the baton. The person who pays it is the final consumer. So at the end of that chain, you either get to a consumer, just a normal person, who pays the VAT and can't reclaim it, or you get to a non-VAT registered business like a bank, and they can't reclaim the VAT and they suffer the tax. So that's the first thing. Who suffers it? It's almost like a sort of purchase tax. So in terms of administration, what most businesses do, particularly small businesses, there are lots of different schemes, but most small businesses calculate their VAT quarterly, and then they do a quarterly VAT return and pay their VAT each quarter. So in terms of timing, you can have a quarter end your quarter end at any sort of month end. So it might be the 3 months to December, it might be the 3 months to January, it might be 3 months to February. So you can have, there are 3 different sets of quarter ends, and it does just depends. Normally it ties into your year end. So what we try and do is that if you have an April year end, then your quarters will end April, then May, June, July, August, September, October, etc. If you have a December year end, you'll have December, March, June, and September as your quarter ends. So normally the quarter end ties into your year end for your annual accounts. So as soon as the quarter is over, you can prepare your VAT return, but you have to prepare your VAT return a month and a week after your quarter end and pay the tax at that time. It's really important you pay your tax on time, or if you really can't, you speak to the revenue and agree when you are going to pay it. So you either need to pay it or agree when you are. You can have that payment just done by direct debit. I don't like that for me personally, because I don't like having large direct debits I can't control. So I don't want them whipping money out without me knowing it. I like to pay it over. There are other schemes you can do, annual accounting, where you pay the same amount every month and then do an annual VAT. I don't know, I can't really see the advantage of that, because it just gives you a bigger job to do every year and you don't know you've paid the right amount. But there are other schemes, and big companies have to pay it more often than that. For most small businesses, you pay your VAT on a cash basis. So the cash that you've received and the cash that you've paid, cash as in bank transfers that you've paid and received. If you're a larger business, then you do have to do it on accruals basis. So you pay your VAT on the invoices that you've raised, not on the cash that you've received from those invoices. But for most small business, and we would do it automatically, you pay your VAT on a cash basis. I get the other very common peculiarity for small businesses. If you're a very small business, you can use the flat rate VAT scheme. And on the flat rate VAT scheme, you can ignore your purchases. So the calculation of VAT becomes very simple. You take your gross sales, so your sales with VAT, the 120,000 in my previous example, and you multiply it by the percentage, the flat rate percentage for your industry. That means you've only really got to know sort of one figure. You've got to know your gross sales, and then you get the percentage, and that's how you do your VAT. Makes it really simple, and for some people in particular circumstances, it can mean you pay a lot less VAT. So it is worth looking at when you start your business. So when do you have to register for VAT? You have to register for VAT if you're a VAT trade and you turn over in 2021, if you turn over more than 85,000, that varies from time to time, so you need to check that. But if you turn over more than 85,000, your supplies are VAT supplies, then you have to register for VAT. So at that point you sort of are registered for VAT, and you have to register. Some businesses that are smaller want to register for VAT because it means they can claim back their purchases, and in particular maybe their fixed asset purchases. That's particularly good if your customer is a VAT registered business, because they don't care that you're adding VAT to your invoices. Whereas if you're consumer facing, it matters a great deal, because the consumer doesn't want that extra tax. When talking about registering, I mean, for a lot of tradesmen, 85,000 means that a guy working or a girl working on their own probably doesn't need to register for VAT, because they will be under 85,000. Maybe if it's one person and